Good afternoon. Today is Thursday, February the 9th. The time right now in Singapore is 11 minutes past noon. And overnight on Wall Street, there's hardly any movement, although there was an early attempt to rally. But at the end of the day, the market closed a little bit on the weak side. Basically, the market has not been able to break out of last Thursday trading range. On the Dow Jones, you can see very clearly the downside range on Thursday was 33,581 and the top side is 34,334.7. And so far for the last 3 trading days, we can see market has been trading within this band of prices, unable to break out either way. And based on what we have seen so far, I think the momentum is a little bit lost to the upside. Maybe for now, I think there will be a little bit of impatience among traders who have been holding on to long position. Perhaps they may be tempted to take some profit off the table. So if that's the case, I think the market may drift lower and to challenge the lower end of last Thursday's trading range, which is to take out 33,581. That is in the Dow Jones. In the S&P 500, we can see similar movements. Okay, yesterday we can see that the price actually attempted to spike but couldn't hang on to its gain, and towards the end of the day itself, it started to drift lower. And if this is the case, there's every possibility tonight or even tomorrow, the price may actually started to decline all the way to test the lower end of the range, form a three-wave equality move pullback from a high of 4,195.4 to test perhaps the 4,070 70 point levels, or even perhaps as low as 4,040 points. Okay, so basically this is a potential three-wave pullback, and they basically still maintain the slightly bullish outlook for the S&P 500. We will have to see whether the price can hold at 4,000. So I think the round number 4,000 is going to be pivotal, and how it closes this week will tell us very much what the market wants to do in the coming week following this. Okay, over the Nasdaq 100, we see similar move, very similar to what we saw in the S&P 500. Market traded to the high last Friday of 12,880, and then market has been pulling back since. And again this week, there's hardly any breakthrough in price range. The market is starting to drift lower, and there's every possibility the market may test the 12,175 to 12,300 level, which is this bracket of prices here. And this is also quite in tandem with this high over here. So this high over here may act as a near-term support. This high is at 12,166. So if the market pulls back and do not break below this level significantly, or more importantly, do not close below this level of 12,166, there's every possibility the market may resume to the upside in the coming week. But we will have to see. Again, this is a three-wave pullback. Unless the market accelerates to the downside, of course, then the entire pattern would have changed. Okay, but if it's just a simple pullback, this can only be seen as a technical pullback and does not compromise the overall bullish outlook, at least not yet. Okay, so we have to continue to monitor prices. Over in Hong Kong, we can see the price ever since it take out the near-term support line, the entire week the market has been trading within this 400-point range. Market actually broke to the downside on Monday's trading to a low of 21,085, and the best it could do was 21,512. So between this roughly 400-point range, market has been trading and consolidating between this band of prices for the last 3 trading days, including this morning. So is everybody guess where it's going to go? But I think that right now we can see clearly this is a three-way pullback, and there's really a lot of possibility that it may actually be able to hold, especially if the market does not take out this level, which is 20,862.7. Okay, so the market near term, I think should be able to find some kind of support here. And if that's the case, then of course going into the next week, there is every possibility market may resume its upside, but assuming that the markets, when it pulls back, do not accelerate to the downside. So if there's any acceleration to the downside, of course, again, we will have to come back and take another look at the pattern itself. But for now, I think the market has that bullish bias, although we see a pullback. Okay, so nothing is conclusive at this point in time. Over in the Shanghai Composite Index, we have a very clear three-wave pullback, and the market has been sitting just above this area of demand here, which is between 3,213 to 3,224 levels, okay, or 23 levels. So the lowest this morning, it actually came down to was actually 3,225.96. Okay, so just marginally above this higher end of the bracket at 3,223. Okay, so we can see that there is some kind of support band here. Okay, so if this is the case, then of course if it can maintain its momentum, there's every possibility that it may actually extend higher in the coming weeks. Okay. So over in the currency itself, you can see the dollar yen having fall back 50%, exactly 50% of the rise from 128.08 to 132.90. Market pulls back, and then you can see that it was sitting just above 130.50 and then started to recover. So far from the bottom of 127.21, this is basically a three-wave rally, and it's only corrective because the price that did an equality rebound here. So if this is the case, then of course this is purely a corrective rebound, meaning to say that the overall trend is still down, and that bias to the downside is still basically being maintained. However, because of last Friday big move here, okay, so I believe something has changed last Friday when the market surged all the way to 132.90, and it is this surge here that may have caused the short-term change in sentiment. And if the market can take out 132.90 either today or tomorrow, then of course it laid the foundation for another push higher beyond 134.80. So basically, I do have a slight bias to the upside for dollar, and if this is the case, we will have to see 132.90. Can it be challenged one more time? And if it can surge past this level and effectively take out 134.80, then of course the trend is very clear. The market has already bottomed at 127.20 and is getting ready to surge out. How would I say, to resume its longer term uptrend. When you look at a weekly or monthly time frame, you'll notice that dollar yen is actually very bullish. So that could be what the market is doing. Short term market has seen a bit of weakness, okay, from 152 all the way down to 127. So that was a big move, and then the market now has found a bottom at 127.20, getting ready to resume its upside. Okay, over in euro versus the dollar, we can see the weakness caused by the big sell-off from 110.30 all the way to 106.70 has been very persistent, so much so that the rebound has been very shallow. So far the market managed to only rebound 23.6%, which is very shallow. So it basically is telling us the underlying sentiment is pretty poor because the market can only rebound 20 odd percent. As compared to the dollar versus the yen, the market has actually pulled back 50%, whereas euro dollar is not able to bounce back 50%. Don't talk about 50%. I think it's only half of 50%, less than half. So the market right now, if this is the sentiment, at the very most we can expect is maybe one more push higher to form a three-wave rebound, perhaps to challenge the 1.08 level. So the market can go to 1.08, look out for selling signal. I think this is all that it can do. Forget about 50%. I think if it can do 38.2%, is considered very good already. And to look for sell signals from there and to take the market lower. I think the market has a very good chance to even challenge the January low at 104.80. Okay. Over in the Aussie, Aussie is doing slightly better. It is also quite conforming to the dollar versus the yen rate. Okay, the market right now rebounded from a low of 0.6855 all the way to close to 50% and just under 70 cents before it slides back. So far, we can see that this is building up for another possible run up in prices, either in the upper end of 70 cents, 0.7040, or perhaps even to 0.71. So these are two possibilities. So if you are very aggressive, you may want to start to sell at 70 cent level. And if you are you're more conservative, maybe you want to hang on for a while and see whether the market has enough momentum to push to 0.760 and perhaps to 0.71 before you decide to do a sell position. So either way, I'm going to start positioning at 0.70 and see market can go how far before I position the next level. If the market still wants to go higher, I will have enough to take up a secondary short position. But I think I will be adopting what I call a very aggressive method, 0.70. I will start to look for levels to sell. Okay. Over in sterling, we can see the rebound very similar to what we saw in euro versus the dollar, has been pretty shallow. The market has only managed about 30% rebound. So far, it does look like there is a possibility it may want to go higher. And again, very similar to euro versus the dollar. I think if the market can rebound back 38.2%, which is 1.2150, I think that's all it can do. So look for levels to sell when the market does get to those levels. Okay. Over in the Canadian dollars, versus Canadian, this market is building up to be even more aggressive. At least the structure looks to be even more aggressive. Now let's remove this one because this line here has been crisscrossed so many times, it has become irrelevant. Let's get rid of it. Now, if this is the pattern that I'm seeing, then there's every possibility we can see a push higher towards 136. See if, but the market will have to overcome two critical levels, which is at 134.80 levels, 134.70, 134.80 before challenge taking up 135.20. If the market can actually cross these two levels, especially 135.20, then it has the possibility of doing the 135.75 to 136.30. So I think upside potential is quite good. And if you want to take a very aggressive look, just put a stop below 133.50 and take a long position to see if market can go all the way to 135.75. Okay. Right now I have no position in dollar versus Canadian. In the crude oil, this is one market that I have actually missed out. I was looking, and yeah, just too bad. I was distracted by other products, so I didn't see this move coming. So the market take out the low in January at $70.45. That's actually happening on Tuesday itself. Market went up to a low of $72.25, and then he has been surging. So this surge itself has not pulled back meaningfully yet. So the high last night was $78.62. So this is quite a big move for crude oil. And all I hope that is market can actually pull back to some distance and for me to anchor a long position, because I'm long-term bullish in energy prices, especially when you see the non-farm payroll remain so strong. That means inflation is still very much in play. And the one of the ideal way to trade inflation is to buy energy. Okay, so energy product is going to be one area in which you can take advantage of a high inflationary situation. Over in gold market, it is a bit of a disappointment because the gold market came down from 1,900 almost $60 all the way to $1,860.60. No, $59.60, and have very shallow rebound. I can see that this rebound is so corrective that what we can do here to hope for the market to go up to the ideal price of 1,900 is going to be a little bit of a stretch right now, because it doesn't seem that it have enough momentum to go higher. So the next best thing to do is to trade the breakout. If the market can have not enough momentum to go to $1,910, which is my ideal price, then obviously then we will have to take the next best. Although this is the least preferred method, is to trade the breakout on the downside. If we have a candle bar that close outside below this near the support line, then I think there's a sell signal to be taken. Then what we can do is to aim for at least a challenge of the January low at $1,824. And then if just hope the market can hold here and put a stop just above whatever the high is. Okay, so this is going to be a two-pronged approach here. Ideally, I want to see prices go above $1,900, and then that will be a much better proposition. And I'm still going to put my stop just above the $1,960 and to take the market all the way down. There's every possibility the January low may not even hold. Okay, there's a high possibility, because I do expect this decline in precious metal prices will last all the way until April. So from now until April, we have 1.5 months at the very minimum. So I think there's a lot of scope for price to move lower. So I do suspect that 1,824 may not hold, and market may actually challenge the December low or somewhere in between the two prices of 1,765. So we will have to see how price react once you take out the January low. Okay, but it has a bit of potential in my opinion here. Over in silver is even worse, because the rebound is so shallow. It is nowhere near the rebound that we saw in gold, although gold is already classified to be struggling to go higher. So I think the upside potential for silver is not very high in my opinion. So there is, I think at best you can expect is maybe a struggle all the way to $22.61 before it's mid selling interest. The ideal situation is for prices to go to $23 and above, and then we can look for a level to sell. But like I say, it does look like the silver prices is struggling to go higher, and the best we can expect is $22.61 for now. And if we want to do the same thing like what we did for gold, is to connect the most recent bottom and see if there's a breakout to the downside. Okay, so this is a very near-term, very crude way of looking at alternative. Okay, if there is no rebound to $23, then of course a breakout to the downside is all we can have. Then depending on what kind of trader you are, how aggressive you are, whether you are comfortable trading breakout, and if you do, then you can consider selling as the market breaks to the downside. Okay, I for one would be very leery chasing breakouts. Okay, over in Bitcoin, we can see a bit of a pullback this morning. Prices have dipped into this band of prices which are highlighted since the beginning of the month, of the beginning of the week itself, at $22 and $22.300 to $22.560. Okay, this is bracket of price has now come into being, because the low this morning is $22 and 373.85. Okay, so we can see that this is a nearby support area, and if this level cannot hold, which I think it may not hold, okay, then the next logical level to wait for the market to settle down will be somewhere near the 20,000 level. Tentatively, I can identify this area between 20,240 to 20,410 to be the near-term support level. Okay, so if market breaks $22.300, there's every possibility it will go to the next level. Okay, whereas the Ethereum has not been falling that much. Okay, on a relative basis, I think Ethereum is a little bit firmer than Bitcoin right now. Yeah, market right now seems to be holding out at this level, which is this morning low somewhere around the 1,621 levels. Okay, so the market seems to be holding up, and I think the market may even drift lower, because if Bitcoin continue to break the 22,300 levels, I think it will cause Ethereum to quickly decline all the way to test the 1,536 levels, okay, which is this level over here. So do watch out for the eventuality. Over in Cardano, we saw the three-wave pullback that has a potential to go down and challenge the 0.37, which I think it may actually happen. And this is a bracket of prices which is going to be fall between this very broad range of price between 0.347 to 0.370. I think the support will come into play. And this structure suggests that until we see an acceleration to the downside, this market is starting to hold somewhere between 0.347 to 0.370, which will create a base for the market to propel higher over the next few weeks. Okay, over in Solana, we also see the market has briefly taken out a near-term support line at $22.43 to go down $21.95, very close to the equality range of $20.74 to $21.89. So again, this is a three-way pullback. If nothing else happens, I think this area should be able to hold and create a base for the market to trade even higher. So overall, the bullish outlook has not changed. Okay, so we will maintain that the market still have that upward bias. That's all I have for you today, and I will see you again tomorrow. And in the meantime, take care. Bye-bye.